Hey, what's up, my friend? In today's episode, I want to talk about, the reason why most traders fail and how you can avoid it. So, number one, fooled by randomness. So, what do I mean by this? So, imagine this. Imagine I, play a game with you, a coin toss, and every time the coin comes up head, you win $2. And every time the coin comes up tail, you lose $1. So clearly, right, this coin toss, the edge is in your favor. Now let me ask you, if the coin comes up tail 5 times in a row, will you stop playing that game altogether? Would you? Unlikely, right? Because you know that it's a matter of time before heads come up again and then you start, profiting. But in trading, when you have 5 losses in a row, or maybe even 3 losses in a row, you start to panic. Help! And then you start to abandon the trading strategy and look for something else. Can you see that there is this discrepancy over here? So remember, right, in trading, just because it's a losing trade doesn't mean it's a bad trade. Let me repeat, right? Just because it's a losing trade does not mean it's a bad trade. In trading, you're dealing with probabilities, not certainty. So if you don't want to get fooled by randomness, my suggestion is have a sample size of trades, right? Depending on your trading style, but to be safe, a minimum of 100 trades to know whether you have an edge or not. Okay, you can't just make an objective decision, right? Whether a strategy works or not based on a 3 or 4, 5 trades, because of the law of large number, because there's this so-called random distribution out there, right, between your wins and losses. It's only after a sample size, a minimum of 100 trades, would you know whether a trading strategy works or not. Okay, so number one, right, don't be fooled by the law of large number. Number two, you don't have an edge in the markets. So this is something I believe I heard from Jack Schwager, right? He said something really insightful. He said that if you want to make money, you got to have an edge in the markets. Because I'm not sure about you, right, but I've seen stuff like traders say, oh, trading is all 80% psychology, right? All you need is the right psychology, the right discipline, right? And you'll make money. But no, I can't agree with that. Why do I say that? Imagine, right, you go down to the nearest casino at your place. You can bring along with you the best psychologist, right? The one who can pump you up before every gamble. You can, use the best risk management practices out there. And I can assure you, I can guarantee you, the longer you stay at the casino, the more money you lose. Why? Because you don't have an edge over the house. And this is the same for trading. You can have the best psychology out there, the best discipline, the best risk management, but if you don't have an edge, guess what? You lose in the long run as well. Okay, so number two, right? You don't have an edge in the markets. Number three, traders, they treat the markets like they are ATM. So another thing that I see often is that, Rainer, can you teach me a strategy that just makes $50 a day? All I'm asking is just $50. I'm not trying to be a millionaire. All I want is $50 a day. Well, what's the problem with that statement? The problem is if you expect consistent profits from the market every day, this has to happen, right? Your trading strategy has to work every single day. And if your trading strategy has to work every single day, it means that the market has to be in the same particular condition every single day. Well, guess what? Market conditions, they change. It is a fact. Okay? And if market conditions change, it means that your trading strategy, well, it will go through a period of working, and then it will stop working, and then it goes back to working again. So you can see that no trading strategy is going to work all the time. And if no trading strategy is going to work all the time, you're not going to make money all the time. So it doesn't matter whether you're going to make $5 a day, $50 a day, $5,000 a day. It's not going to happen because market changes, right? And no trading strategy works all the time. So if you have the mindset that you're going to make daily profits, I suggest that you look elsewhere. I think a fixed paying job would be much more appropriate. Okay? And finally, right, the fourth reason why most traders fail is because they are not willing to do the work. They want to be spoon-fed. I know, right? It's human nature. We want shortcuts, right? We are lazy. We want shortcuts, right? We want a magic indicator that speed buy or sell. But the problem is, if you're not willing to do the work, you'll never have the conviction behind your trading strategy. For example, you have seen, often the saying that, oh, you need a minimum of a 1-to-1 risk-reward ratio to be a profitable trader. No, right? I've done my research, right? Mean reversion trading system, you can have a 65% win rate and a risk-reward ratio of 0.8, and you can still make money in the long run. Or how about this, right? Oh, you need to have a high win rate, a 60-70% win rate to make money in the long run. No, a trend following system is anywhere between a 30 and 40% win rate. But the reason it makes money is because the average profit is larger, right? 2 to 3 times larger than the average loss. And that's how trend followers make money despite a low win rate. So you can see that if you were to follow, right, so-called trading sayings, right, all the common trading quotes, you find that, you won't be able to make money, because it's only through the research and development that you've done, only then will you have the conviction, right, to trade the systems, to trade your strategy. So there's no replacement for hard work and your own due diligence. Okay? So with that said, I have come towards the end of this episode. If you've enjoyed it, hit the thumbs up button and subscribe to my YouTube channel, and I will talk to you soon.